Good morning, everyone. Welcome to our Monday morning trading room. I trust you survived the week all right. You know, it's not a bad idea from time to time to take a little bit of a break from trading anyhow. Trading, it's not demanding physically, but it sure is demanding mentally. All right, here now the daily NASDAQ, and you can see I'm putting a couple trend lines across here. It looks like the market, it's funny how often the market will respond or respect the trend line of the first two pivots. So you look at these two pivots here and look at how the market responded to that. And then you take a look at the two larger pivots and again, how the market responded to that. So not a real surprise last week that the market fell off to this 7,500 zone. Maybe got a little bit deeper than I was expecting. I was thinking maybe 7,600, 7,550, but it did drift, did encounter the bigger trend line, did bounce up. And now we can do the same thing here at the top. We can sketch in a couple of trend lines or a trend line. It looks like it's going to follow the lines relatively closely. And we've got ourselves a little bit of a rally going on. When I look at this and compare it to the volume, notice how the volume is declining on these rally bars. Why is that? Volume is a relative indicator, so big volume on big bars, small volume on small bars. That's how it should look. See, here's a small bar, small volume. That's normal. Big bars, big volume. Makes me wonder whether or not we're going to see a breakout above this trend line. And the trend line definitely coming into play today if we take out Friday's highs. All right, that's enough of a review. Let's get back here. Ray says, on the report side, Fed Chair Powell speaking at 1 p.m. Eastern. All right, well, that could slow things a bit. It is just the opening buzzer, so I'm not getting too excited here just yet. Okay. Hold on here. Just tidying up something on my chart. Bear with me a sec. Okay. Here now, taking a look at the Eagle. Get a view of the overnight. Relatively quiet. Very sideways. With a little bit of a pop-up going into the pre-open open. And here we are with the little bit of a rule of three signal. It looks like that had some decent follow through, but I don't see that we've had our first in sync signal of the day yet. Not on the Eagle. The Raptor probably gave us a signal through that little rally there. Let's see. Well, depending how quick you were, opening buzzer right here, there's your first in sync signal. Looks, by the timestamps here, it looks like it would have been very difficult to get a hold of that one. And then we produce a signal here. Well, depending where your stops were, doesn't look like that was a very successful trade, unless you had the ability to cover your trade all the way back here. So the market fairly neutral to start. Oh, here we go. Here's our first in sync Eagle signal, just printed. and that also struggling. All right, I'm going to give the nod here to the sellers. Am I going to get a signal? I've got a signal here on the Raptor now. I'm going to interpret it as an early cloud crossover signal. Ooh, hold on. Hold your horses there, Eric. Okay, here we go. We're going to, cloud's almost fully crossed. If they take out these lows, I'm going to look to short. And we should be printing another signal to sell here shortly. There it is. All right, so this is an early cloud crossover signal. I call it an early cloud crossover signal because the clouds are not fully crossed yet, but it looks as though they will try to fully cross, and hooray, looks like we got down there, hit our profit objective, and Bobby is your uncle. Okay, well, that's a good start. Why did I think bearish? Why did I try to sell? Well, because we saw two attempts of the market to rally. We saw this rally right here, this signal. Then we saw this signal right here to rally. Both signals not going any higher. So when that happens, there's every reason to believe that the market may try to head lower. And sure enough, it did. Now, I'm not saying we're going to be in a downtrend just yet. But we did try to test the bottom end here. Next signal that prints will be a number one signal now that the clouds are fully crossed. Here we go. There's the number one signal. And the opportunity is still there to short again. This now the high probability signal. Oops, sorry, that's not what I wanted to do. Okay. So the opportunity is still there. The problem with this trade, which I'll show you here in a second, is stop placement. Okay. So that's where my stop is suggested. I have to at least place my stops right here. All right, so now I'll get ready to try to adjust my trade to break even. If I can get down about 3/4 of the way to my profit objective. We should head lower. There should be a little bit more follow through here. And I'll explain in a moment why, if we can get this trade to cooperate. Oh, maybe I should have left my buy order in play. Okay, well, we'll just put this back here and I'll show you what's going on. Oh, it might actually be easier to see it on the Eagle. Let's go to the Eagle. Whenever a market violates a significant swing point, now overnight swings don't always factor in, so you have to sometimes use a judgment call here. But this was the low of the morning right here. When a market breaks a significant swing point, in this case, the low of the morning, there will be a tendency of the market to make two moves in the direction of the breakout. The breakout being move number one. This is now move number two that we are anticipating. Generally speaking, move number two can be substantial. And oftentimes traders will even use move number one as a guesstimate of where move number two may go to. In which case, it looks like if the market continues lower at this point, we might see the market trading somewhere around 77.15. No, providing they don't go any higher. This is also similar to when we identify the sideways trading range. So what we're looking at right now is the retest of the breakout. I'm going to throw a line down here just to see how they do today, if they can get down there. Go back now here to our Raptor and get ready to manage our position. Looks like we got our number 3 signal. Oh, we don't need another number 2 signal. That would give us a 232. Those are inclined to reversing. Okay, come on, sellers. You got to go. You got to take out these lows. If we can take out these lows, then I can begin to adjust my stops. You can do it. You can see your tick 77.29. Probably pick up a few. There we go. Pick up a few sellers. Come on, let's go. There we go. You can do it. Just a couple more ticks. Shoot. Maybe I was a little quick with my stop, but I'll take the break even. We're kind of getting the same thing happening in reverse now that we saw over here, right? They're trying to go higher. They didn't. They went lower. Okay, well, now they're trying to go lower. If they fail, well, there's a chance they're going to try to rally up a little bit. All right, put those on the shelf. Oh, got the reverse. You could almost just put a just in case order to short below here, or look to pick up the next signal to sell. There we go. There's our next signal to short. Again, I got to get the stops out of the way. I don't want them too close, at least not initially. This is pretty much a continuation of the earlier signal that we were in. it looks to me right now that the market has a little bit of a downtrend, so I'm favoring the bears, favoring shorting over buying at this point. Come on. You want to go lower. Darn it, they're pushing back too soon. That's not what I wanted to see. What I was hoping for was, as they broke the lows here, we'd pick up a few more sellers. It's not, terrible because we do have the weight of the trend on our side. I was hoping for a little bit of a brisker move. One more. There we go. I'll take the trade to break even. Again, we're challenging the lows. Should encourage a seller or two. There we go. Kiss on the profit target and there. All right. Hooray. Now they're getting a little sluggish here, trying to head lower. And if you kind of draw in the declines, we have that move lower, then we had, actually let's draw it like this. Then we had this much lower, and then we have this much lower. So you can see we're not really strong to the short side, right? These blocks are losing strength, which is what tends to happen. We may see a bit of a pullback before the next attempt to run the market down again. Or maybe this will wake up the buyers and we'll actually see a rally. We shall see. Actually, we've got ourselves a number 2 signal, and we're getting a trend change signal here on the Falcon. All right, let's take a look at that. I'm going to anticipate where that signal is going to print. The nice thing about the counter trend signal besides the fact that they always look so darn tempting, is that you know where to cover your trade. You can cover your trade here below the lows. Bollinger Sweep, very strong. The Raptor actually producing a number 2 signal a little bit earlier, which would have been nice to get on board. We would have had that retrace back to the hard edge. Now that we're in the hard edge, of course, we always anticipate a reaction around the hard edge. One more bar, come on. Quite a little bounce off that primary line. That's that blue, dotted blue line in there. Absolutely, Aspen. Aspen's got a question here about the signal generation on the Raptor. I'll go over that for you here in just a moment. Okay. It's probably a good time for a Raptor review. It's been a little while. What constitutes a number 1, a number 2, and a number 3 signal? Let's do the number 1 signal. The number 1 signal is the cloud crossover signal. It tries to tell you when a new trend may be emerging. Now, one important note for all these signals, you have to take context into account. You cannot trade these signals in a vacuum. All right, so always try to look, as the saying goes, you look left to be right. All right, back to the signals. So the number 1 signal forms when the clouds change direction. So when the soft edge of the cloud, this is what we call the soft edge, is above the hard edge, this is what we call the hard edge, the clouds are bullish. When that is reversed, the clouds are bearish. The clouds tend to give us our directional bias. When the clouds cross, they always make a little bit of a pullback. Don't ask me why, it's just what they do. If the market is likely to continue with the direction of the cloud crossover, the market will, after that pullback, continue lower, and that will initiate a number 1 signal. So this one that printed right here is almost textbook, if it wasn't for the lack of context. What the signal I took was back here. I called it an early cloud crossover, and maybe you can see why. The clouds are like 75% of the way crossed over. We have the pullback, and now we come back with the signal. The reason I chose to take the early signal was the market context was weak. That's the same reason this number 1 signal did not work out, and why this number 1 signal struggled to work out, because the market context was very, very weak. The number 3 signal is a continuation signal. It is the hard edge bounce signal. So in order to be a continuation signal, you have to have a trend to continue, don't you? So once again, you're going to be looking at the left side of the chart to see what's been going on. If you deem this to be a trend, well, then you have a valid number 3 signal right here. If you deem it to be still congested and sideways, then you may choose to avoid the number 3 signal, or maybe look for a second push opportunity on the number 3 signal, or just wait for a better opportunity. Remember, we don't need many opportunities throughout the day. We just need a good opportunity that we can count on. And to be fair, opening range is tough to trade. Sometimes you'll see me take trades like I've been doing this morning, and you're sitting there scratching your head thinking, what the heck is Eric doing? I didn't see that. It's just because I have more screen time than you. I've seen it develop 100 times before, and I have a pretty good notion what the market will do. And I try to explain why I anticipate the market doing the things that it's doing. But don't be frustrated if you don't see it just yet. You will. As you spend time with your tools, it will become clearer to you. But, you know, like I said, you don't need to jump on every signal. If you're looking at this number 3 signal and you're thinking, oh, I don't know, that's a pretty ugly looking number 3 signal, maybe I'll wait. Okay, then wait. You know, if the bottom falls out of the market and you're kicking yourself saying, oh, why didn't I take that signal? First off, don't. Secondly, go back to your chart and see if there was something you missed. Was there a clue there that the next time you may say, oh, okay, I see the market doing that again. This time I'm going to go for it. Okay, so the number 3 signal is a continuation signal. So 2 things you need for that is the trend. So you have to have something that you can call a trend, and you need a pullback to the hard edge. Doesn't matter which one, the fast one or the slow one. Occasionally, we're going to get the market just falling short of the faster hard edge. This tends to happen when the market's trending really well. So sometimes we'll get that visual number 3 signal where, you know, we're looking at it and we're waiting for it to encounter the hard edge, and it may come up a tick or 2 short and then come out with a sell signal. Well, that's okay. You can still call that a number 3 signal. Remember, computer programming is very specific. It has no gray area. It either is above a certain value or it isn't. But you're not a computer. You can interpret things. The number 2 signal, which in hindsight we should have reversed the number 2 and number 3 signals. So the first 2 signals were trend, and then the third one was a reverse. Never mind. The number 2 signal is the reversal signal. And the reversal signal occurs, let's see if I can get a better looking number 2 for you. Right here. The reversal signal occurs, again, you have to have something resembling a trend, because what are you going to reverse if you don't have a trend? Otherwise, you're just in a sideways chop. So first thing you need is a trend, and then you need a test of the extreme. In this case, the extreme is the low. So the market comes down, tries to resume the trend, it fails, and all of a sudden we print a number 2 signal. This tells me that, according to the Raptors programming, the market is a little bit weak. And we kind of saw that. We saw the market kept trying to go lower and lower and lower, and it wasn't doing very well with that. So we come back with a number 2 signal. The hard edge is always the target for the number 2 signal. So here's a signal where you may look at it and you say, well, okay, maybe I'll try to take it back here to the primary line, see if the market encounters the last swing point, the hard edge, a little bit close, but doable. So there's the number 2 signal. Oh, it did not print. Okay, so then we're holding on, holding on. Note this number 3 signal. At this point, we had a little bit more of a trend developing. Okay, so here we have yet another number 2 signal. So we have a trend, we have a test of the extreme. In this case, it was actually these two bars right here, where the market's retesting the low, coming out of that, and printing a number 2 signal. I believe this time it had a little follow through. Yeah, there we go. Okay, again, the target, the hard edge, we found that fairly easy. Note the reaction after we hit our profit objective. Okay, and now, well, if you're following your Raptor, you already know which signal is going to produce next. But when I see the clouds almost fully crossed over like this, what signal do you think I'm looking for? Well, if you're thinking a number 1 signal, you are correct. And lo and behold, we have the number 1 signal, and we got a little bit of follow through. All right, so here we are. Aspen says, thanks, but there's no write-up on the 1, 2, and 3 to read. You know, Aspen, it's been a bit of a struggle because most people want everything in video format now. And so we do have a Raptor manual. Unfortunately, it hasn't been updated for a little while. I know it's on the to-do list. But if you make a note of today's video, October 7th, then you can just reference that. And please ask as many times as you need to. Honestly, folks, I see there's a bunch of you in the room here. Most of you never ask any questions, which is fine. But please ask. I'm here for your benefit. So if something isn't clear, if you don't get it, ask. I won't make you write stuff out on a blackboard a million times. Ray Burke's in the room. Ray, long time no see. I am so glad you came into the room, and you have to shoot me an email. We have loads to discuss. I'm putting my email here in the chat window. Folks, I'm still having a little trouble with the other email address. All my emails funnel eventually into this email, my Gmail account, so please send me an email if you have any questions. And the other Ray in the room says, I took the Raptor signal to the left before the number 1 signal and got my $100. My day is done. Way to go. That's what we like to hear. I may need, oops, wrong tool. Here we go. Yes, I may need to call on Mr. Burke if the market is a little bit sluggish. I may need him to push the market. Ray does a great push. He cracks me up every time. Even just thinking about it, he slays me. All right. There he goes. He put it in the chat window here. Push. Oh dear, Ray, you're a riot. Yes, we need to catch up. So yeah, please shoot me an email or put your email in the text window here so I can write it down. All right. Looks like we're bouncing back and forth here a little bit. Yeah, I know we all do. The other Ray in the room here says, I really miss Ray's recordings. And I got your email here, Ray, so let me just write that down. Oh, that's fantastic. Yeah, Race has been talking to Ben and we're putting the band back together. That's fantastic news. Okay, the Eagle still kind of within the larger daily range that we have going on here. Which is actually good for us. You know, these large daily ranges seem frustrating, but what's nice to see is when we get this breakout, we're going to look for the retest, and we're going to look for the opportunity when the market tries to go higher, because at this point, we'll have the market sandwiched. We're going to have it pinched, and we can essentially bracket the trade. In fact, I'm wondering whether we can count this current rally attempt as our breakout. I may just do that. Oh, sorry, I don't need this. Let's see if we get a couple of bars counter. I like to see at least a couple of bars. All right. I'm going to treat this current rally as a breakout. I know it didn't break out, but it's the next best thing. And I'm going to set my profit orders accordingly. Now, if the market turns once again, and it should do it soon. The thing with these breakouts and the retests, here's the breakout, here's the retest, we want it to see occur relatively soon. I don't care if it drifts back into the trading range a little bit, but if it drifts back toward the middle, then the breakout obviously wasn't valid, and there was probably like a itty-bitty retest in here, something that may have shown up on the minute bars or something, but obviously nothing that occurs or that registered on our charts, and essentially the breakout would be void. So okay, there's one bar. And you can see the eagle working now with a well, they flashed us a buy signal there shortly. Very, very strong rally here. There we go. Okay, so now we've got the market in a bind. All right, we're bullish, so I will leave things as is. Actually, we could probably pull that stop a little bit. The ideal stop for this trade, by the way, is down here. You do not want to place your stops right here. And the reason should be obvious. You just end up strangling your trade. And what's going on at this point is we're in early, but we're still subject to the breakout and the retest. Not everybody's going to be getting on early. Okay, that's now the better breakout. This is an actual breakout. So if you're not in this trade, this would be a good spot to put your order right above there, 77.60 and change. Not real happy about this. The fact that they're stalling so soon after the breakout tells me there's not very many buyers up here. May have to pull my order just a little bit more. At least not very many buyers yet. Come on, give me a bull bar so I can get my stops up. There's one. Give me another. At this point, it's pretty much last chance for the buyers. If I can get a couple of rally bars. Come on. They're trying. All right, I'm going to squeeze the trade at this point. They're either going to go or they're not. I'll roll my stops below anything with a tail to it. Oh, come on. You were doing so well. Well, looks like the highs of the morning pushing back a bit. Well, if nothing else, I can show you why you don't want to trade too many times during the day. We had our couple of trades in, we had profit in the bank. It's just the law of probabilities, the iron law of probabilities. You may think that the market is all computers and stuff, and there is a lot of algo trading to be sure, but still run by human beings. I'm a little concerned. The Bollinger Suite, very, very bearish here. I'm wondering if this breakout fails, if it would be a viable short. If it would be, I don't reverse on my trades very often. Let's see, I bet I have another signal brewing here somewhere. No, not yet, actually, just the hawk. Yeah, that breakout, well, even had I waited to enter above here, still would be stuck in the trade. I'll give it just a couple of ticks more. Got to see the buyers push back off these lows. If they don't, now keeping a deeper stop would likely keep me in this trade longer, but that's probably not a good idea. All right. So let's see if they break down now. I'll get my exit order ready. And let's see, 47, I would be looking to pick up 37. Now, all this is just a basic structure type trade. We saw the breakout, we saw the retest, we saw the attempt to move the market higher. It failed. Well, it failed in the sense that it tagged me out. Perhaps a deeper stop would have held me in. The market definitely neutral though, right? Talking about market context earlier. We don't really have a trend, and that adds to the difficulty. All right, we got the trend change signal on the Falcon. We've got the first micro macro cross on the Hawk. We are in the hard edge, so we do expect a reaction of sorts in the hard edge zone. Yeah, we got all this back and forth going on. All right, I'm gonna scrub the trade here. I'd still believe it's viable, but I think I'll hold out for a proper signal. Very, very quiet. Well, Ray did say that there was a report out. Just double checking the calendar. Yeah, that's coming up soon, so it could be putting a bit of a nix on things. That might actually be affecting the market already. It's not due out for a little while, but you know, when you consider this is today's session, we haven't gone anywhere. We're just churning the same numbers. All right, well, we'll give it a few more minutes here, but we'll probably close up the room shortly if we don't get any kind of follow through here. All right, we've got ourselves a number one signal here with the second push opportunity. So if the market rallies off the hard edge here, I will look to buy it above that swing high that formed. This is what we call a second push. Ooh, and here we come with the number two signal. The plot thickens. As we work ourselves into a little bit of a sideways trading range. Okay, so we got the number one signal. We follow up with a number 3 signal. And again, you know, the number 3 signal is a trend continuation signal. It's purely a judgment call whether or not you're going to call that a trend. But the hard edge is holding, so let's try to take it back up to the highs du jour. And when and if I can get about 3/4 of the way to my profit objective, I will roll my stops up. There we are. This actually has the ability to go once we get above those highs. Note how the market did that little hop. We tagged out a few sellers, took them out to the woodshed. So whereas things were looking fairly bearish to start the day, now it looks as though we may have gotten a little bit more bullish again. Although as soon as I say that, look at that, they stall on the highs. Yeah, see that? They're slowing down again. So it looks like we're just going to churn for a little while here. They're going to take their turns beating each other up. I think we'll call it a day today. If anyone has any questions, please type away. Just throw a question mark in the window there and I'll wait for you if you're a hunt and peck typist. But this last little bullish rally kind of brings us into the whole retest scenario again on a potential breakout. So if we get a couple of bearish bars here, you can throw in an order to buy above. But honestly, it looks like they're not getting much follow through. Great question here from Aspen. Good one to finish the day on. How do you get your economic news? Well, I don't. One second, the reports calendar is here courtesy of Forex Factory. There's other websites that have reports, but you know what? These guys are among the best. They make it very easy because it's very visual. The country and or currency Forex Factory, of course, a Forex site, so you're going to get reports from around the world. And you can set it for your own time zone. So this is Pacific time. And they will highlight any report that's on the books. And yellow reports, orange reports, and red reports show you, well, their impact. So red, something that potentially is a market mover. And it looks like Wednesday we have another FOMC day. This is going to be tough. So Tuesday is probably going to be a bit of a dud, as will Wednesday. If you're interested in reading the news, well, they have a news feed here as well. And bar chart is also a good one. So bar chart does not show you the news reports, but you can track just about anything else you want. Nice thing about bar chart, when markets come up for expiration, it's an easy way to see what the most fluid contract month is. Come on, work for me here. So we're interested in the NASDAQ right now, so you can simply find the NASDAQ. And you can see all the current months, and it shows you volume and open interest. So you can do a very quick comparison between different contract months. Now, the NASDAQ, the E-mini, the Russell, you're always going to be trading the front month. But let's say you're trading something like soybeans. You can see the front month is huge, but you could go out and trade next November. It's, well, volume's a little light. Open interest is pretty decent. But let's say next March, the March contract, the spring bean contract, looking not too bad. Lots of volume on that, lots of open interest. Anyways, a couple of handy resources. If you are really diehard on the news, I would avoid, you know, Fox News, CNN, that kind of stuff. You can sign up for government news feeds by going to the respective government department. However, they are very difficult reading, so I usually avoid them. I've always been more of a technical trader in that everything I need to know about the market is reflected in the price, because this is real money, real people putting real money where their mouth is. And as such, it's already based on the news. By the time I read it and digest it, the market's already done its thing. Great question, though. Thank you for asking. All right, gang. Looks like we're struggling with the highs. So Raptor traders, wait for a number 2 signal to print. You're probably going to see the market retrace here to the hard edge, as the market may attempt to test the bottom end next. But be careful. We are definitely stuck in a sideways zone. All right. I'll see you tomorrow. Bye for now.